Oh, that's real good.
Hello everyone, and welcome to our channel Penny Lesson. We talk about everything finance, from tips on making money and proper investing to news about the different economies and situations affecting the global markets. The goal of this channel is not only to teach you how to be more financially responsible but also to teach you how to be more aware of global events. So why not just sit back and relax while we tell you what's happening in the finance sphere? Be sure to subscribe to my channel and hit the notification bell to be constantly updated on my latest videos. Remember, one penny lesson a day keeps being penny less away. Michael Burry has been one of the most talked about investors in recent months. On his Twitter feed, the individual is unafraid to express his ideas and viewpoints regarding the situation of the economy. Michael Burry hasn't been speaking the most upbeat news lately, if you can believe it. He has regularly hinted about a massive stock market meltdown over the past few months and thinks we're just getting started. But what has the investing community's attention is his most recent 13F, filed a few weeks ago, and even more intriguing than his tweets. Let's discuss what Michael Burry has said on Twitter, specifically over the past 2 weeks in this video. And then let's examine his 13F filing to see what insights we can glean from it. The story is thus well known. Permanent bear tweeter Michael Burry, but during the past 6 months, the market has grown significantly. The S&P 500 has increased by around 17% since its June low. Usually, this would drive many doomsday prophets to resume their slumber, but Burry is showing no signs of doing so. He keeps repeating that he believes the stock market will go much worse and that the current performance is a short-term bear market bounce. Look at this, please. He pointed to similarities and parallels between the current situation and the tech bubble implosion on July 22nd. He tweeted on August 11th, "A bull market for the Nasdaq because it is up 20% from its low. Who conjures up this stuff?" The Nasdaq did that 7 times after 2000. Falling 78% to its bottom in 2002. On August 15th, he added to that argument by adding, the Nasdaq finished a 2-month rise of 43%, while the S&P 500 gained 22%. By the bottom post-WorldCom in late 2002, the S&P would have fallen another 42% and the Nasdaq another 48%. But comparing that mindset to today's is quite intriguing because many news pieces I'm reading now imply that the worst is over and the market has simply returned to a bull run. Not in Michael Burry's opinion. Interestingly enough, his most recent 13F filing supports his claims. Every position Michael Burry held at the end of Q1 was sold off in Q2, according to his 13F filing. He held 11 equities at the end of the first quarter. But at the end of the second, every single one of those positions had been liquidated, and just a small fresh investment in Geo Group stood in their place. This is entirely consistent with what he has been saying for the previous 3 months regarding the stock market and the economy. He has been stating that the market is declining, so it does make sense that he sold off his investments and switched back to cash if he truly believes that. His words and deeds are consistent, which is more than can be said for many of the other big names. What does this mean for regular investors like us, though? In this video, I want to investigate this. As a result, I've heard from numerous others who claim to be trimming their portfolios as a result of Michael Burry. Unfortunately, you can't get anything out of them as an investor. As he has repeatedly demonstrated, he is not always focused on the long term even if he is value-minded. He's not thinking about the short term. To be honest, his positions almost always have a short-term perspective, and the only time 13Fs are ever useful to investors is if you are certain that the super investor in question is thinking long-term about their investments. Keep in mind that the 13F filing provides a snapshot of the portfolio at a specific time. The portfolio might change 8 times between those dates if you are following the 13F of someone like Michael Burry. As a result, as a long-term investor, the information you receive could be laced with false signals. Burry may have purchased those Apple put options on March 31st and then sold them on April 1st for all we know. This is why you should take a grain of salt when reading someone like Michael Burry's 13F filings. Don't get me wrong, 13F filings are still typically important sources of knowledge, especially if you follow long-term value investors like Warren Buffett. Changes to the 13F filings in these circumstances are truly exciting, since it is likely that the information will still be accurate when it reaches you and for many years to come. For example, consider Warren Buffett's portfolio history in his 13F reports. Check out his 10 best stocks. As you can see, there hasn't been much change in his assets over the past 3, 5, and 10 years, and when there has been change, it's typically been for the better. When you compare Buffett's 13F history to Michael Burry's, you will notice that his portfolio has no patterns going back to Q4 2018. As a result, there isn't much information in the data that investors like us can use. The fact that Michael Burry may be a bit of a loose cannon and can stray from the tried and true Buffett-style investing strategy that we all adhere to is another reason why I hesitate to utilize any of his 13F data. Undoubtedly, he is very analytical and value-oriented, but he also places bets in situations where others wouldn't. For instance, the one investment he did purchase in Q2 belonged to the private prison company Geo Group. However, if we shift our attention to Wall Street, there are undoubtedly some important problems for a conventional long-term value investor. Their revenue is not very significant when compared to their prior performance. Their income has decreased. They have low ROA, and ROC. They have a 213% debt-to-equity ratio. Burry is not afraid to venture where many other value investors probably wouldn't normally go. Therefore, even though I find the man's market commentary on Twitter to be highly interesting, I don't closely follow him as an investor at 13F time. And to be completely honest, I wouldn't be shocked if his stated portfolio in another 3 months looks completely different from the one we currently see. That is simply how he does his investing. Wow, was that news? Why not ponder it? Want to know the latest? Comment if you want more articles like this. This video is just one of many videos on my channel that brings you the latest news about the world of global finance and economics. So go hit that subscribe button if you don't miss out on content like these. If you enjoyed this video, please hit the like button. Thank you for all your support, and I'll see you again next time. Remember, 1 penny lesson a day keeps being penny less away. Cheers.